Hey, welcome to the Mortgage Minute for, what's the date today? It's the end of May, so we haven't talked to you for a while, but big important news today, mortgage rates are on the move. So, headlines are mortgages are back in the news, making headline news. Why is Jim Flaherty getting more uptight about mortgages? Now he's talking about attacking or addressing 30-year amortizations. As some of you may or may not know, you can still get 30-year amortizations if you put 20% down. If you're a real estate investor, 30-year amortizations are available, but may not be for long. So if you want a 30-year am, better get onto that right away. But here's the more important news today. Mortgage rates are going up. Your long-term fixed rates, 5, 7, 10-year rates are on the rise. You're asking why? Wait a second. Everybody's been telling us that mortgage rates aren't going to change until the second quarter of 2014. And now all of a sudden banks are moving interest rates. Why is that? Here's the thing you need to remember. There are two different types of rates. When the media talks about the fact that the Bank of Canada is not going to change rates, what they're talking about is the Bank of Canada prime rate. So that affects your variable rate. The Bank of Canada prime rate is not changing. However, that does not mean that your 5, 7, or 10-year rates are not going to change. They're governed by a different factor. They're governed by the bond yields. Right now, there is a significant upward pressure on bond yields. We've seen a sharp, and I mean sharp, increase in bond yields over the last couple of weeks. Spoke to some economists yesterday, and there's a prediction that we're going to see not an insignificant rise in 5-year fixed rates from 2.89 up to 3.15, and then we may see another increase in 5-year fixed rates within the next coming weeks. Why is this happening? Well, we're starting to see a bit of a recovery in the United States. The Canadian dollar's going down, and when the dollar goes down, bond yield goes up, 5-year rates go up. So it's going to be very confusing because the media is not going to draw attention to this. You're going to continue to see the Bank of Canada say, no change in rates. In the meantime, you'll be sitting there lulled into a false sense of security by the Bank of Canada rate not changing and miss the fact or miss the opportunity to lock into your long-term fixed rates. So get active today. I mean, really, you have like 24, 72 hours max before you miss the boat on locking in your rates if that's what your goal is. If you're not sure what to do, give me a call, send me an email at peterkinch.com. Thanks. That's the Mortgage Minute.